This is what happens if you choose to ignore time frame Confluence. And this is exactly what will happen when you confluence your time frame and order flow using top-down analysis. Welcome back to the channel. In today's lesson, I will share two live trades. One is where I ignored Confluence and time frame alignments and I faced losses. And the other one we have is the one where I was able to make good money from the financial market. They actually made 8% from the trade, even though price offered about 14%. I made this 8% because I aligned time frames and order flow using top-down analysis. After doing this, I was able to secure the win. So I'll be walking you through these examples and I will show you exactly what to do if you find yourself in similar situation. This is a very good trade. This trade is on GBP JPY. I share the results to my social platforms. And this particular trade was shared to the community, which is a VIP community. Remember, I said I'll be showing you live trades and live examples. So I'm showing you what it looked like before and after the trades. So this is it right here. The setup on GBP JPY was shared on the 30-minute time frame. And from what you can see, this is the exact trade opportunity. And looking at it this way, you know it's a high probability trade opportunity. Now, why did we mark that particular trade and what was the outcome of that trade? This is exactly what you'll be doing in the next few minutes. If I try to zoom out on the 30 minutes time frame, what will you clearly see from here? What you can clearly see is that GBP JPY has been bullish, pushing to the upside. Very clear opportunity. Now, seeing this, any smart trader will be looking to go long. We will likely want to continue buying in this case because price switched from bearish to bullish from what you can see here on the 30 minutes time frame. This was a bearish move, price continued bullish. Now that we have a bullish move to the upside, every insane trader will look to continue bullish, trying to trade in line with the order flow. Now, if you try to mark out the recent area price could probably react from as a smart money trader using smart money Confluence, what you will do right here is marking this particular zone. Well, this is actually the main point of interest if you want to mark your zone. But the way I trade, I like refining my zone. Zone refinement is one approach I usually apply in the market. So refining the zone so I can actually make quick profits and leave the trade. So this is it right here after refining the zone. Now, what other confluence can you see right here that increased the probability of this zone? Paying close attention, you can agree with me that we have the liquidity sweep of this internal structure right here. This is an internal structure right here. Price took liquidity underneath this zone, so it's also valid. Apart from that, we have other confluence right here because this is a very clear break of structure, which explains that the order flow is clearly bullish in this case. Price is pushing to the upside, and we're having the mitigation of price inefficiencies. At this particular point, price was able to build some liquidity and a lot of inducements above this particular point of interest, which has now improved the probability of this zone holding. So this was the whole trade opportunity. Now let's try to play price forward and see the outcome of this trade. Now, at this point, price returned to the point of interest, mitigate our zone nicely. We start seeing nice reaction to the upside. I was actually active in this trade with a lot of VIP students playing price forward. Price continued to the upside. Around this particular high we have over here, price was offering about 2%. So price offered 2% around here, and my target was 4%, which was around this particular level. So if price actually got to a level around here, I would have made 4% from this trade. But from what we can see, price offered 2%, tagged me out of the trade, and let's continue to play price forward. Now, what you can see is that price tags us out and starts to drop to the downside. You see that massive drop. Now, this was the trade I lost this week. As a matter of fact, I lost about 5 trades this week and I won 3 trades. Now, I've always said it anytime I get questions from students. When it comes to the financial markets, I don't think anyone lose the way I lose in the market. I lose a lot of trades, but the most important thing is always making money more than you lose, right? I lose more trades more than I win, but at the end of the day, I make more money more than I lose. Think about it. Now, taking a look at these trades, some people might ask, why did we lose this trade? And some people, we have a lot of answers why this setup failed. As a matter of fact, I made this post on the social platform asking why did this setup fail, and I got a lot of answers which sounds valid. And a lot of people might tell you that this setup failed because we have this price inefficiency around here and price went to rebalance this inefficiency. If you said that's the case, well, it's still good. Some other traders will tell you this particular trade opportunity failed because we have liquidity resting underneath this low. If you said that's the case, it's still very okay, because price has been moving to the upside for a very long time. Price needs to do some retracements and some deeper pullbacks. It's still very much okay. But one thing and one of the major reasons this setup failed is because we failed to do time frame alignments for this particular setup. Personally, I did the alignments, but I chose to ignore it. And I stated it when I started the lesson. I knew about it. I ignored it because sometimes I take this kind of risks in the market and it plays out. And one thing that have made me a lot of money from the market is taking risk from this market. Now let's drop to the higher time frame to see why this setup failed. So this is the daily time frame right now, and from what you can see on the daily time frame, you see that price is clearly bullish. But one thing I've made known and obvious anytime I teach you about trading is try to look at the left side of the market, because the information you have from the left side of the market will always give you the confluence and idea of what to do and what to execute in the market. Now, trying to zoom out, what can you clearly see? Price is at a key level of supply. I saw it when I had the analysis, but I chose to ignore. This is a key level of supply. Now, what can you clearly see? Price taps into the supply, and you already know that the levels we have on the higher time frame is always stronger than what we usually have on the lower time frame. So price tapped into the higher time frame supply took over in this case. That's why price was able to blast through a lower time frame demand, and the demand was not able to hold price. Now, what am I trying to teach you in this case? While taking your trades, especially on the lower time frame, try to see what price is doing on the higher time frame, because if you try to zoom out, this is clearly a strong level here on the higher time frame. You can clearly see how the level was created. Institutional move to the downside, just like what I usually teach. Look for where we have that institutional move. This is what I call a sweep order block. This is a sweep order block, a very high probability order block in this case. You can clearly see that price still left inefficiencies around here, which needs to be balanced. Then when price got to the level, supply took over and our zone wasn't able to hold price. So just from the explanation, you already know why this particular setup failed. With other things you said, if you said it was because of liquidity, I'm not going to argue that. If you said because price came to rebalancing efficiencies, I'm not going to argue that. But one of the major reasons why this setup failed is because price was reacting from a higher time frame key level. And once price is reacting from there, note this zone has low probability. I saw that. I decided to take the risk because I've won trades like this. And you have to note, even some scenarios, we usually have maybe inefficiency down here and it plays out. But the only case and scenario where I won't look to take this kind of trade is if we have that price inefficiency directly underneath this zone. I'm not going to take the trade. And I took this trade because price was about 20 pips away from the inefficiency we had down here, right? 20 pips away from there. That's why I decided to take the trade. But anyways, I lost the trade, and I'm going to show you the ones I won and how we were able to identify the trade by aligning time frames and order flow with top-down analysis. Let's see that on AUD USD. This is the second example on AUD USD, and these are the trades I won, and I'm going to show you exactly what to do if you equally find yourself in this case. Because I won the trade, it doesn't mean it was an easy trade to identify and take. It takes a lot of decision to identify this kind of trades. So this is the trade. AUD USD 4 hours time frame, and this is what the trade looks like when it was identified. It's actually the first trade opportunity because we had three different trades on this same pair in the last 2 weeks. So looking at AUD USD on the price chart, you can clearly see that price was bullish in this case. If I try to zoom out, it's easy to identify. This is actually the higher time frame. So it's actually going to make the work a little bit easier for us. Now, this lesson doesn't mean the higher time frame is better than the lower time frame. I'm only teaching you what to do if you find yourself in different scenarios. Okay, all time frame works and they works perfectly if you understand them. Just that I'm a better trader on the higher time frame. So price is bullish right here, and at this particular point, we start seeing some bearish movements, and this was confirmed after price shifted in structure around here, because this is an internal shift around here, and this was exactly where the market structure shift was confirmed. So seeing this alone, you already know that price is shifting in its structure. So you should be changing your bias in this case. You should have a bearish bias. Now, based on the other trade I showed on GBP JPY, a lot of people might actually pick interest trading from the extreme level, which is also a very good idea. But I took a very big risk with the VIP students because we saw a valid trade setup around here. This is a valid supply in this case, and this supply was able to sweep liquidity above the swing high. So this makes it a swing sweep order block, a valid one. Price also built some inducement area around here, and it left some inefficiency, which automatically makes this a valid trade opportunity. Now, some people might say it's a low probability trade because we have some inefficiency around there, but from what you can see, price already rebalanced this inefficiency partially, not fully balanced actually, but price partially rebalance the inefficiency. So we didn't look to consider that because it's valid from what you can see right here. Now let's play price forward as it returns back to this particular zone. So price returned back to our zone, starts to play around. It wasn't moving to any specific direction. So I just said to the VIP students, you know what, close your positions in this case because price is not ready to move yet. So at this point, I closed my position at break even, and I believe every other person in the community will definitely close at break even or small loss. Finally, we start seeing some bearish intention from the market. So all we had to do is to drop to the 1 hour time frame to spot new trade opportunity. So this is the opportunity we're able to identify here on the 1 hour time frame because we can clearly spot another valid setup. And if you follow the last lesson where I talked about range and sweep order block, the combination, we have it here because price was slowing down. Here is a range, and before the momentum clicked into the market, we see the liquidity sweep of this particular high before momentum kicked in. Price also broke internal structure right here, which now increased the probability as well. What it actually did right here is making it valid because without the break, the setup is not valid. Now, this is where we marked the point of interest. Price was able to build some liquidity inducement around here. So let's see it in the community as well. So here is the trade opportunity in the community when it was identified after price played around, took the liquidity. This is the valid opportunity. So finally, price came back for the mitigation because it moved to the downside, came here for the mitigation, and finally price starts to drop. See, price starts to drop from there. Now, when price was dropping, I already made 4% around this particular area, and I secured my profits because it was a very simple trade to take. And why is it a simple trade to take? Price aligned bearish. The order flow in this case is bearish because we had series of mitigation. Firstly, we have the rebalancing of inefficiency, mitigation of the higher time frame supply, mitigation of the internal supply, and price continued bearish. So this simply explains that price is bearish and it's important to continue to take bearish trades. This is it in the community. So this was the trade when it was active, same trade when price was ranging inside the zone. And finally, it swept liquidity, dropped, offering about 4%. This is where price offered 6%, but as always, I usually go for 4%. Now, this is a new trade opportunity from the 2 hours time frame, and I'm about to show you this now. So here's the last example. By just looking at the price charts, you will see the trade opportunity, just like the way I showed you in the Telegram community. Now we've identified that the order flow of the market is bearish once you look at it from the higher time frame, which means you should be looking for your bearish trade opportunities, and this aligns with the confluence and the order flow as well. Now, this is price building liquidity before the sweep because it's very obvious right here. This is a slow price action around here, and before price dropped, we saw price sweeping liquidity above this particular point of interest, and it broke structure to the downside. Over here, we have price leaving some inefficiencies, which signifies that price could possibly build liquidity around here before the mitigation of the point of interest. Now, at this particular point, this was when we started to mark the zone which we'll be trading from, which is this particular one we have around here. So this is how we got to the first trade opportunity. Remember, the first one, we couldn't make money. Personally, I closed at break even. Every other person might close at a little loss or little profits. Then second one, we were able to make 4%, even though price offered about 6% at this particular low. And this is the same trade opportunity. And if you've been following the last two lessons I had on GBP AUD, you see we had similar things, and I'm showing you the exact same thing on a different pair right now. So playing price forward, then this was the first time price came very close to our zone. My limit order wasn't triggered, and this is the second time. If you try to play price forward, you can clearly see price tags us in and finally starts to drop to the downside. This was how I was able to make 8% from two trades that offered about 14%. So I hope you're able to understand exactly what I explained in today's lesson, how you can make money by aligning your time frames, and how I lost the very first trade opportunity because I couldn't align the time frames. I only focused on one particular time frame and I lost the trade. So thanks very much for watching this. I hope you got value from it. See you in the next lesson.